let us look at how Article 5 of the India-USA Treaty is structured. And generally, in most of the treaties, you are going to find out the same structure across. But there would be certain changes wherein, some of these things may or may not be present in a treaty, while in others, they may be present, as well as some of the things may be additionally available. So a typical Article 5 would look something like this. Paragraph 1 generally deals with what is known as a fixed place of business resulting in a PE, also called the fixed place PE. Now, a fixed place PE would not only refer to an office space, which could be, owned or rented by the company, but it will also refer to things like machinery, certain equipments, which might be stationed at a fixed place in the source state. Right? We will deal more about this when we go in detail. Then paragraph 2 will tell you what all is specifically included in the PE definition. Right? But since I use the word included, it obviously implies that there could be other things which are also there and which will constitute as a PE in addition to what is specifically mentioned. Article 5, paragraph 3 deals with preparatory or auxiliary activities which do not result in a PE. Now, what can happen is that in case of some of the businesses, they may be carrying on activities in the source state. Let's say if India were the source state, okay, which do not directly or indirectly, somewhere remotely, they might be contributing to the generation of income, but their activity or their nature is considered as such that it is believed that they do not result in income generation to a significant extent. And therefore, they are considered as preparatory to the main activity. Generally, when you are carrying out a preparatory or an auxiliary activity, in those cases, it is excluded from the definition of the PE. Paragraph 4 deals with the case of a dependent agent. Now, a foreign company may operate in India either through setting up a subsidiary or maybe hiring an agent who can do the work that the company would have done by themselves. Whenever this agent who's working for the company is so much engrossed or is acting as if he were the virtual presence of a foreign company in India, and where his existence is dependent more or less on this particular client, in those cases he is treated as a dependent agent and therefore a PE. But then if dependent agents are covered, independent agents should be out of this. Paragraph 5 tells you in what condition, what circumstances a person would be considered as an independent agent. And paragraph 6 deals with holding subsidiary relationship may not necessarily result in a PE. While this is quite understood, because to constitute a PE, it is the nature of activity which are done in the country rather than the legal form which is relevant. As a corollary measure, it implies that just because you have a subsidiary in India does not mean you have a PE in India as well.